Ever wondered why your hard-earned money might be at risk during a financial crisis? We are here with a shocking revelation as we explore the world of finance with none other than Robert Kiyosaki, the man who's here to decode why banks could potentially seize all your money in a crisis. Don't miss this eye-opening insight. We seek the safety of our money when the economy suffers a downfall, and who better to guide us through this financial maze than the legendary Robert Kiyosaki. You know him as the author of Rich Dad, Poor Dad, the guy who's been preaching financial wisdom for years. In this video, we're going to discover a fascinating perspective from Kiyosaki about why banks might seize your money when a crisis hits. It's a really useful guide, so make sure you stick around till the end because you don't want to miss a single word of this financial revelation. Robert Kiyosaki discusses various financial concepts and strategies focusing on why banks can play a significant role in financial crises and how individuals can navigate these challenges. Let's break down the key points in simple terms. In the world of finance, the role of banks and the wealthy elite can be truly mind-blowing. Robert Kiyosaki sheds light on their influence in our financial system. He explains how banks thrive by lending out more money than they actually possess, a practice known as fractional reserve banking. Kiyosaki emphasizes that banks love it when people borrow substantial amounts because it fuels their profits. Kiyosaki's perspective challenges the conventional belief that saving money is the path to financial security. He asserts that due to the fractional reserve system, saving money can ultimately devalue your hard-earned cash. In this fascinating exploration, we discover why Kiyosaki believes banks play a pivotal role in the financial landscape, and how this could impact your financial stability, especially during times of crisis. So, let's look deeper into this financial revelation and learn why. According to Kiyosaki, banks might seize your money when the chips are down. Kiyosaki emphasizes that getting rich doesn't involve laboring for money, but rather leveraging money to work for you. Kiyosaki draws a contrast between wise financial decisions, such as borrowing to invest in income-generating assets, and tactless choices like borrowing for liabilities such as cars or purses. Kiyosaki's strategy involves creating assets like books or real estate, which generate income and offer financial security. He criticizes the traditional notion of saving money in banks due to the fractional reserve system that multiplies debt while advising people to harness the power of debt wisely, as he did post the 2008 crash. This perspective aligns with the topic shedding light on the importance of financial education and highlighting the risks associated with traditional savings in banks amidst economic uncertainties. Kiyosaki's approach encourages individuals to take control of their financial destinies and navigate economic crises with confidence. Robert Kiyosaki's first principle is that the wealthy focus on creating assets that generate passive income. Instead of working tirelessly for a paycheck, they make their money work for them. An example of this concept is owning real estate that generates rental income. While it may require an initial investment, this passive income flows in without constant effort, in contrast to solely relying on a job. Kiyosaki encourages everyone to seek financial education, highlighting the significance of learning how to make money work for you. He mentions creating assets, like writing a book and selling licenses, as a means to generate income without continuous effort. For instance, an author can earn royalties from selling book rights in different languages, creating a long-lasting income stream. Robert Kiyosaki's perspective on saving money and using debt as a tool for wealth building challenges conventional financial wisdom. While many people are taught to save diligently, Kiyosaki encourages us to reconsider this approach. Kiyosaki questions the traditional advice to save money in banks or low-yield savings accounts. He highlights a fundamental aspect of the financial system. When you deposit money in a bank, the bank doesn't simply lock it in a vault. Instead, banks use your saved money as a resource for lending to others. This practice is known as the fractional reserve system. When you deposit, say, $1,000 in a bank, the bank is allowed to lend out a significant portion of that money to borrowers, keeping only a fraction in reserve. So let's assume they lend out $900 of your $1,000 deposit. This is how banks make profits. They charge borrowers interest on the money they've lent. Meanwhile, they pay you, the depositor, a much lower interest rate on your savings. Over time, this system can devalue your savings due to factors such as inflation and low interest rates. Your money might not grow fast enough to outpace the rising cost of living, resulting in a decrease in your purchasing power. Kiyosaki suggests that debt, when used wisely, can be a powerful tool for wealth building. Rather than fearing debt, he encourages people to understand how it can work in their favor. Here's a detailed explanation. One way to use debt effectively is by borrowing money to invest in income-generating assets like a business or real estate. Let's say you secure a loan at a low interest rate to purchase an income property. The rental income from that property could potentially exceed the interest you're paying on the loan. In this scenario, you're leveraging other people's money, the banks, to generate wealth. Kiyosaki also emphasizes the importance of understanding tax laws and using them to your advantage. For instance, many governments offer tax incentives to encourage certain types of investments, such as real estate. When you own income-generating assets like rental properties, you may be eligible for tax deductions and benefits. The rich often structure their financial affairs to legally reduce their tax liability. By owning assets that provide tax benefits, they can keep more of their income. For instance, depreciation on real estate is a legitimate tax deduction that can significantly reduce the taxable income generated by the property. By recognizing the dynamics of the banking system and understanding how to leverage debt for wealth building, you can potentially achieve greater financial success. Moreover, comprehending tax laws and using them to your advantage can further enhance your financial well-being, allowing you to keep more of your hard-earned money. Kiyosaki delves into the fractional reserve system used by banks, where they lend out more money than they actually have in reserves. When you save money in a bank, they can lend out a portion of it multiple times, creating money in circulation. While this system is designed to stimulate economic growth, it can lead to the devaluation of your savings over time. Contrary to popular belief, Kiyosaki advises borrowing money intelligently. He suggests using loans to invest in income-generating assets, allowing you to outpace the interest cost and grow your wealth. This strategy, if executed wisely, can significantly contribute to your financial well-being. Kiyosaki emphasizes the value of entrepreneurship, encouraging individuals to create their own assets and income streams. Entrepreneurs can innovate and develop unique assets, such as businesses or intellectual properties, which can provide long-term financial stability. Ultimately, Kiyosaki's message centers on the need for financial education, understanding how money works, how to make it work for you, and how to navigate the financial landscape is crucial for financial security. With the right knowledge and mindset, you can safeguard your wealth, even in times of crisis. In summary, Robert Kiyosaki's financial insights shed light on why banks might seize your money in a crisis. By focusing on creating assets, seeking financial education, utilizing debt wisely, and understanding tax efficiency, you can take steps to secure your financial future. Embracing entrepreneurship and continuously learning about finances can empower you to navigate the ever-changing economic landscape successfully. Robert Kiyosaki's financial philosophy challenges conventional wisdom by urging us to rethink our approach to saving and debt. By questioning the practice of merely accumulating money in low-yield savings accounts, Kiyosaki reminds us that banks utilize our savings to generate profits. He advocates for a strategic use of debt as a tool for wealth building, emphasizing the potential of borrowed funds to yield more income than the interest paid. Moreover, he highlights the significance of understanding tax laws and leveraging them to legally reduce tax liabilities through asset ownership. In embracing these principles, individuals can navigate the financial landscape more effectively, potentially paving the way for greater financial success and security. If you found this video informative and inspiring, please give it a thumbs up, share it with your friends, and subscribe to our channel for more valuable content.